Hello, my name is Steve Bigelow with the Candlestick Forum. We're now in September. All the kids are back to school if they're allowed in school, but we're now seeing some weakness in the market. Look at the wedge formation that was setting up in the Dow. You can see also that you're starting to lose trajectory and you're starting to see some dark candles telling you the sellers are starting to take control. The fact that they broke it down through the bottom of this support of the wedge obviously illustrates that some selling is coming into the market. You add that to the fact that last week we saw that gap up in the NASDAQ, which is usually where you start looking for sell signals. Even though the NASDAQ was up slightly today, notice that it was just a Doji day. It wasn't a very compelling day. So you start adding the Dow, the NASDAQ, the transportation index, and the S&P, you're starting to see the markets get a little bit tired. That would make you get ready to start selling. This is what we're going to be concentrating on now on a full day training on September 18th. If you took the mini series or the mini course a couple weeks ago, this is going to enhance and kind of solidify what you should be looking for as far as using candlestick signals to tell you when the probabilities are starting to go against you. Something like Santa, you could see how they couldn't get up through this level, but even though you hadn't closed back below the T line prior to day, at least you had a place to set your stop to close out. It should have been going in this direction or this direction. It shouldn't have been coming back after failing that level 4 or 5 times. This is what we get as far as a benefit of visually recognizing when the sellers are starting to take control. Now, even though they hadn't closed it below the T line, you start adding up the fact that the markets are starting to get soft and this can't seem to go up further. You ask yourself, is this the best place to have your money, or the probabilities start to turn against us? Now, the probability factors are always built into the candlestick signals. Our position on AEHR is still based upon your little slow curve, fry pan bottom, best friend breakout, J-hook pattern. And note how it supported right on the T line before going up through the resistance level into a new wave. Again, this is what allows candlestick investors to put the probabilities in their favor. You use that 2+2 analysis with Amazon. Notice when it started off the Morningstar signal, came up through the 50, pulled back, and this is where you observe the obvious. And the observing the obvious is, what is everybody else doing when it's trading along here at the 50? Well, it seems to be supporting, creating a J-hook pattern. We can see that immediately and get prepared for a potential next wave, well, at least your first target coming up here to fill the gap. Once again, just simple analysis tells you when the strengths are coming into a specific pattern to give you that much better probabilities that you're heading in the right direction. Same scenario here on Tesla. Came up to the resistance level, consolidated, and then note where they pulled it back to. Right smack dab on the T line and did a hammer signal and gapped up today. What did it tell us? They weren't afraid of the resistance level anymore. The probabilities are pretty strong. Your uptrend is still in progress. So we can use candlestick signals to tell us when it's time to get out of a trade. If you were in an uptrend and they gapped it down below the previous day's open, we knew what we were probably looking for, a bearish kicker signal. You close out the trade immediately. Now you can make an analysis. I've got a bearish kicker signal. What do I expect? A very strong price move to the downside. You stay short until you see a buy signal. And that was the reason for our recommendation to go short on ADCT. Look at your bearish kicker signal, close back below the T line. It opened positive, but remember, the force is down. next likely target could be down here at the 50-day moving average. So you want to have as many short positions, if not more, now in the portfolio that we're seeing weakness in the market. And remember, they've pulled it back strong. Now you got to see whether this time they're going to hold the T line, or the T line, or is it time to start? I'm sorry, that's the 50, or below the T line. They're starting to sell off, and right now we don't know whether that's going to support here or head lower. That's why you want to have both long and short positions in your portfolio. That'll be it. We'll see you in the chat rooms. Join us September 18th to get a much more clear insight of when to start taking profits when the probabilities are starting to go against you based upon the information built into a candlestick signal. That'll be it. We'll see you in the chat rooms.